We appear to have Adrian back on the line. Adrian, let's get your thoughts on what you are expecting to unfold today as the market digests this news. And I think a lot of focus will be put on the credentials of both Malusi Gigaba and Sifiso Buthelezi in key portfolio positions here in South Africa.
I'd agree with that, Bronwyn. I think one of the big issues is, who are these men and what credentials and credibility do they bring? There was a long-standing concern that Brian Molefe would come in, and that a person who had been identified as not having the gravity and a record appropriate for this type of position could be appointed. So I think there will be a lot of weight put on, or a lot of emphasis put on, the weight and gravity of these two men. They are stepping into ginormous shoes of a minister and deputy minister who are highly regarded by business, by global capital markets, and they have a respected record of fiscal management in what has been very, very difficult times for South Africa from an economic perspective.
Adrian, how do you anticipate the markets to react, given that we might see banking stocks and, of course, the currency come under significant pressure?
I think that the most obvious place to go and look is what the response is in bank stocks. I think you can expect government bonds will price down as the South African market opens. We've already seen the overnight reaction. I wouldn't be so bold to say it's all in the currency, because South African capital markets are not yet open. But you have a very good sense of the way currency is going to go. We've had a repricing from 1370 through the course of yesterday to 1270 rather through the course of yesterday to 1350 this morning. If you want to write off or wipe off a couple of $100 billion in capital, this is exactly how you do it.
With that said, exactly, with all this uncertainty in the market and potential losses that might be experienced, that must put a lot of pressure on you as an investment strategist looking for value and opportunity on the market.
I think in any environment, whether it's a euphoric environment or an environment filled with fear and anxiety, what you're always after is the application of an investment process and a consistent philosophy. So whilst this represents a tough day and a tough moment, a tough day for us as investors and a tough moment for the country, our investment process and philosophy remains unwavering. We'll navigate through this.
Earlier, we were chatting, Adrian, to Dumisani Hlophe, who's a political analyst at Kunjalo, and he was saying don't expect any movement within the top six, because if they don't feel as individuals that they have enough power, they will stay as a collective. Now, the market, there are many rumors out there that we could see Deputy President Cyril Ramaphosa making a firm stand here and really gathering more support from those who are anti-President Jacob Zuma and anti the Gupta allegiance. What is your sense? I mean, do you think that we will see any movement within the top six? Is anybody brave enough to go on their own?
Well, you have the view and the expertise and insight from a political analyst. Although politics matters tremendously to what we do and how we act and invest, and today is a great example of just that. I'm not a political analyst, so I'd rather stay off that ice. But having said that, if ever there were a moment to act, it's now.
Adrian, in terms of the rand and coming back to the fallout that we've seen, do you think that we will now track at these levels? Are you anticipating a ratings downgrade? Andre Cilliers a moment ago coming forward and saying that the rating agencies won't move collectively to downgrade on this decision to reshuffle the cabinet alone. They will be looking for broader macroeconomic factors, for decisions that impact the structure of the South African economy before they make that call. Do you think that he may be dreaming and that the rating agencies are going to react hard and fast today?
I would be very surprised if the ratings agencies came out as a collective and downgraded South Africa. However, I won't be surprised if there is a downgrade, and it's S&P that's most likely to act first. They've been on the front foot for a long time, cautioning South Africa and demanding performance from the country and the economy. A number of reasons or explanations have been given for them to give us a stay of execution, and institutional strength, fabric, policy certainty has been in that basket of reasons why South Africa has avoided a downgrade that for a long time has looked inevitable. I would go as far as to venture that this is about as certain as I think you could ask for in an uncertain world, that South Africa will be downgraded by one, if not all of the ratings agencies. But it's unlikely that they come out in sort of in a screeching moment and collectively respond with hand-wringing and wailing. The ratings agencies have the benefit of being able to make these assessments from the balcony rather than the dance floor.
That obviously will come at a very critical time when we started seeing indications that the South African economy was about to turn around with lower inflation, hopes of lower interest rates, and of course more optimistic views on economic growth. With that said, FDI flows and of course the impact on the South African consumer, pressures are clearly set to rise.
Yeah, to me, this is a case of snatching defeat from the jaws of victory. That might be a grand statement. It wasn't quite that South Africa was going into a chest-beating economic moment, but we desperately, urgently need job creation to re-establish economic growth, to lift the trajectory. Inflation has calmed down, and currency strength was helping the inflation through the imported inflation effect. We also had some other unanticipated benefits, the alleviation of the effects of the devastating drought, commodity prices improving. So things really were starting to sort of collude for the first time in a long time to work in South Africa's favor. It looks like that has all been taken off the table. Net under the Zuma administration, per capita income has grown at 0%. We have been in effectively a per capita income recession for the entire Zuma administration, and this perpetuates that.
Adrian, thank you very much for your insights. I'm sure we'll be catching up later in the day. Adrian Saville is the Chief Investment Strategist at Citadel.